Let's go over to our game plan for next week. First, we want to come in on Monday, and we want to see, I just mentioned this, the West Texas Intermediate crude down to 78 from 80. That would be a sign that the inflation story really is transitory. That would be a win for Jay Powell. I think it's a real possibility. I was talking about oil with my friend Rusty Brazil of RBN Energy, my favorite energy expert. He's on quite a bit. And he's got of the opinion that the $100 oil thesis from not long ago has really evaporated. Sure, the speculators will be back on any spike up, but we're finally seeing more production from the Permian Basin. That can keep a lid on prices. Wouldn't it be something if the thing that drove the CPI up the most peaked? I think it did. If you're searching for inflation, though, you're going to find it with Tyson Foods, which reports Monday morning. We know food inflation is hitting everyone hard. Tyson will hurt the bull case for certain. They always do. Then, after the close, we go get the results from Lucid Group. That's that luxury electric vehicle maker, which might be due for a revaluation after Rivian's monster move this week. You know what? We're going to be in San Francisco next week, where we hope to catch a glimpse of Lucid's car. I think this is one of the handful of companies that's ushering in the twilight of the internal combustion engine, in this case, in the luxury vehicle. You know, I like Tesla, and I like Rivian. But given the state of the market, I'm betting any of them can work here, including the one we see, Lucid. Tuesday, oh boy, behemoth. We hear from Walmart and Home Depot. I'm getting signals from my charters friends that Walmart stock's a goner, that it's got an ugly double top brewing. As someone who owns it for my travel trust, I take in every clue, both technical and the fundamental, even as I think Walmart's doing fine. No, it's not Costco, which has membership fees to fall back on, and it's not like Target with its tremendous house brands. By the way, Target reports on Wednesday. I think it's going to be good. Still, 200 million people visit Walmart every week, and so much of the retail is on fire that I got to feel that even the flame will catch to there. Now, as for Home Depot, this one's got a pattern, and you got to understand this, okay? They reported, say, usually like 6 o'clock and 30 seconds or 6:01, and it tends to open up on earnings news and then plunge later in the day when they listen to the conference call. If you don't already own it, I recommend waiting for the typical post-quarter sell-off. It's getting nauseating, but be aware of it. If Home Depot does get hit again, though, I got an alternative plan, because it can probably drag down Lowe's, L-O-W. They don't trade as much together anymore. That's your chance to pounce on Lowe's, L-O-W. Lowe's is now the better operator, and that's thanks to CEO Marvin Ellison's incredible turnaround efforts. We get results from Lowe's on Wednesday morning. I'll bet they deliver a fine quarter with a strong holiday forecast. So if Home Depot goes down, you can buy some Lowe's. Travel Trust has positions in 2 major companies that report Wednesday night, Cisco and Nvidia. Cisco is now the definition of what I call just a cheap tech stock. We'll be following it closely to see how its transition to more of a subscription-based service provider is going. Higher margins. I expect good things. NVIDIA's got a tough act to follow itself. Stock's already more than doubled this year, so the expectations are high. Unfortunately, it's got a nasty habit of jumping up and then pirouetting down when someone finds some line in a quarter that's a little bit off. And you can tell it's going to happen. Someone downgraded the stock today, fearing elevated expectations. Now, this went so deep into next week that you'll have to check your investing club bulletins to see what we're thinking. We do a deep dive into all the charitable trust stocks when they report. Why do I mention this? Because it would make you better. Okay? Thursday morning, we hear from 2 retailers that I both like. And one of them is a noodle-like, which is Kohl's. I started liking it. There's some activist action there. And then Macy's, which I've liked all the way down, and then up. And that's not really distinguished me other than the fact that I think Jeff Gann's doing a good job. As I keep telling you, I love retail right now because the consumer's so strong that it can trump any worries about a lack of inventory that the media teams just endlessly focus on. What matters is there are very few promotions going on. That's far more important than the port congestion story. They can sell almost everything at full price that they have, and that sends their stocks higher. Port congestion. Do you know how many stores we have? Yes, twice as many as we need. So if you can't find something in one, well, you go to the other. After the close Thursday, there are a ton of reports from some very good companies. There's Applied Materials. Semiconductor capital equipment maker has a great deal to crow about. Applied Materials tends to trade with Micron, the big commodity chip maker. And Micron's been red hot all week. No one's talking about it except for me. But if you look at this, so many people downgraded at 68, 69. It's pathetic. We also hear from Intuit. That's the small business owner's best friend. This software company has been consistently fabulous. It will be fabulous again. That's what they do. They report fabulous numbers. Then there's Workday, the cloud-based human capital and actual capital management software play. I think Workday's last acquisition is just crushing it. That last quarter was amazing for them. And then last but not least, a lot of last there, Palo Alto Networks reports. And with so many people still working from home, I think this is the golden age for cybersecurity companies that are not necessarily all native cloud. Now, the last few quarters of Palo Alto and Nikesh Arora have been extraordinary. You know what? You're going to get another one. Finally comes Friday, which is Foot Locker Day. When you go back to Nike's most recent quarter, there were a couple of things we didn't like, especially the manufacturing problems and slowdown in China. But the U.S., Nike's on fire. By the way, Nike stock never looked back after people stopped thinking about China. Now, this is a fantastic setup for a mall-based shoe store, and there you are with Foot Locker. If they can't blow it out in this environment, though, I don't know when they can, and I will no longer speak of them, even though they're the only company that reports on Friday. I will make up a company rather than talk to them if they blow this quarter. That's not true, but you know what I'm saying. The bottom line, look for a week where the shorts will still be trapped. The consumer's robust and tech falters, if only because it's run so much. But therein lies the opportunity is to wait for the faltering. A lot of these stocks have run too much. And if I tell you to buy them Monday, then I can see on my mentions column, people will say, there goes Cramer again. But I actually have a guy who reads that now because I'm tired and my feelings got hurt.